This is The Real Story with Michelle Makori.
Tether, the world's biggest stablecoin issuer, is now going for gold, literally. Tether is looking to expand across the entire gold supply chain, from mining and refining to trading and royalties. Tether just boosted its stake to nearly 38% in the gold royalty company Elemental Altus. Now, Tether already holds almost $9 billion worth of physical gold stored in a vault in Zurich. Those reserves partly back Tether Gold, the company's gold-pegged stablecoin, which has a market cap of about $1.4 billion. And Tether is in talks with mining and investment groups about deploying capital across gold projects and was reportedly exploring opportunities at the recent Beaver Creek Precious Metals Summit. Now, Tether's global CEO, Paolo Ardiano, put it this way: while Bitcoin is often called digital gold, gold is like nature's Bitcoin to us. And this comes as gold is on a streak, hitting new all-time highs and continuing a rally that has seen it up more than 47% year to date. Central banks have been buying gold at record levels for several years and now hold more gold than US Treasuries. So with Tether pushing into physical gold markets, the issuer of USDT, the world's most widely used stablecoin, is positioning itself as more than just a player in digital dollars. It's looking to anchor itself in one of the oldest forms of money. And Tether CEO posted on X recently, Bitcoin, gold, and land are the hedge against incoming darker times. Now, Tether also holds around 86,335 Bitcoin, worth about $9.7 billion, making it the sixth largest Bitcoin wallet. Now, let's zoom out, because this move into gold is especially significant when we consider that Tether plays a vital role in the Genius Act, which is trying to secure America's monetary edge. The Genius Act ties crypto stablecoins directly to the US dollar and US Treasuries, aiming to ensure that America sets the standard and keeps the dollar at the center of global finance. So let's break this down. The Genius Act, at its most basic level, regulates stablecoins. Stablecoins are digital tokens designed to hold a steady value, usually pegged one-to-one to the US dollar. So you can make transactions without the wild price swings of other cryptocurrencies like Bitcoin or Ethereum. Stablecoins are the middle layer or bridge that lets you move in and out of different digital assets without leaving the crypto ecosystem. So if you sell Ethereum or Solana to buy Bitcoin, for example, you don't usually cash out straight into dollars at your bank. What you actually get is a stablecoin, a token pegged to the dollar in your crypto wallet. Then if you want to buy Cardano or Shiba Inu or whatever, you can use those stablecoins to make the trade instantly. It's the bridge. Now, for years, stablecoins have operated in a legal gray zone. The Genius Act, which stands for Guiding and Establishing National Innovation for U.S. Stablecoins, changes everything. It was signed into law on July 18th of 2025, and it creates the first nationwide framework for payment stablecoins. The Genius Act ends the free-for-all. Only approved issuers can create payment stablecoins. Every coin has to be backed one-to-one with high-quality liquid assets like cash or short-term US Treasuries. There are no more mystery reserves. There's no leverage or rehypothecation. And from now on, issuers are treated like financial institutions with strict oversight, anti-money laundering checks, and full compliance. And it's this oversight and the ability to track transactions that are raising some red flags that this could be a Trojan horse or a backdoor for a CBDC or central bank digital currency. Although the law does explicitly state that the Federal Reserve may not issue stablecoins directly. But according to critics, this does lay the foundation for programmable money, surveillance-friendly digital infrastructure, and a multi-trillion-dollar ecosystem of so-called narrow money, digital cash that does not circulate through traditional credit creation. So there is a concern that this could be a stealth gateway for a central bank digital currency. And this could be a valid concern depending on how all of this plays out. Meanwhile, Bo Hines, who used to run the White House Crypto Council and is now the CEO of Tether US, is heading the launch of their new stablecoin, USAT, and he recently called the Genius Act the first piece of the puzzle to modernize the US payment system. What is truly genius is how the act channels crypto demand straight into US Treasuries, and it does so when the world is de-dollarizing. Foreign central banks are cutting back their treasury holdings, loading up on gold instead. So stablecoins could become the backstop, a fresh buyer of short-term US debt, helping the dollar hold its ground in a shifting global order. So stablecoins are not only now officially part of the US financial system, they are an integral part of the global crypto financial network. And when the world's largest issuer of stablecoins is actively investing in gold and the gold ecosystem, it is something to take note of. When the Tether CEO says, while the world continues to get darker, Tether will continue to invest part of its profits in safe assets like Bitcoin, gold, and land, well, it's time to pay attention. And Russia is certainly paying attention. Russia claims that the Genius Act is all an elaborate scam, a crypto scheme designed to erase US debt and reset the system. Putin's advisor, Kobyakov, is accusing the US of devising a devious plan to diffuse its trillions of debt at the world's expense.
America is currently trying to change the rules in the gold and cryptocurrency markets. Remember their debt? $35 trillion. Essentially, these are two alternative currencies to the global currency market segment. Washington's actions in this direction clearly demonstrate one of the main American objectives. They really want to solve the problem of declining trust in the dollar. The USA, as it was in the 30s and 70s, will solve their financial problems at the expense of the whole world, driving everyone where? Into the cryptocurrency cloud. Over time, when part of the US national debt is placed in stablecoins, the US will devalue this debt. Once again, in simple terms, they currently have a 35 trillion currency debt. They are pushing it into crypto, into the cloud, devaluing it, and starting from scratch. This is for those who really love dealing with crypto.
Now, quite the accusation, but the historical events he's referencing did indeed happen. In 1933, President Roosevelt confiscated gold from US citizens and revalued it, instantly devaluing every paper dollar. In 1971, Nixon severed the dollar's gold convertibility, breaking away from Bretton Woods, ending the gold standard, and effectively devalued the dollar, resetting finances at the world's expense. Now he claims that the Genius Act is a modern version of the same playbook. Russia says that the US is using stablecoins to pull the world back into dollar debt, and then claims they will devalue that debt. Now, as for gold, Kobyakov may be onto something there. He's referring to the idea of gold revaluation. And there's real debate in financial circles about whether the US could revalue its gold reserves to strengthen its balance sheet, just as it did under Roosevelt. Treasury Secretary Besant, a well-known gold bug, floated but then somewhat retracted the idea of gold revaluation and monetizing the asset side of the balance sheet. And the Federal Reserve recently released a research paper which analyzed how other countries have revalued their gold. And there are many other signals or hints from Washington insiders that this may be coming, including a post from President Trump in which he said, "The golden rule of negotiation, he who has the gold makes the rules." And then there's Donald Trump Jr., who explicitly states that his father's administration is exploring a powerful economic tool under the Gold Reserve Act to reprice America's gold. Now, granted, he is saying this in the capacity of a paid spokesperson for a gold company, but still, this is a bold message. So that could be the second prong of this monetary reset that Russia is referring to, gold revaluation. Now, let's keep in mind that Russia certainly has an agenda here. It wants to sow narratives undermining US legitimacy and trust in US Treasuries. Now, stablecoins don't just erase US debt. They don't vaporize trillions in obligations. What they do is create new demand for US Treasuries, especially short-term bills, and at a time when traditional buyers like the BRICS Plus are de-dollarizing. But it is very interesting and very curious that the world's largest stablecoin issuer, Tether, which holds billions in short-term treasuries, also owns billions in gold and is now moving deeper and deeper into the gold industry. So while Washington is trying to tie stablecoins to dollars and treasuries, one of the biggest players in the space is hedging with gold, the very asset that central banks have been hoarding as they step away from the dollar. And that is the real story.
This is The Real Story with Michelle Makori.